Welcome to our RxDC reporting series. This is part 1, which covers RxDC reporting overview and how to complete a carrier TPA or PBM questionnaire, as well as it discusses how to complete P2 and D1 filings if you have been informed by your carrier and/or TPA that they will not be reporting on your behalf. My name is Liliana Salazar. I'm Chief Compliance Officer for the Pacific Region of Hub International Employee Benefits Practice. As we discuss prescription drug reporting, the RxDC reporting, it is important to understand a few aspects of the RxDC process. We'll start today's discussion with an overview of the RxDC reporting requirements, how to complete the carrier questionnaires, which are reflective of the P2 reports, as well as the D1 reports. And then we'll discuss next steps. Let's start with a quick overview of the prescription drug reporting. The RxDC reports, as they're commonly known, were introduced by the Consolidated Appropriations Act, or CAA. It is referred to as the Prescription Drug Data Collection, which reports information regarding group health plans. It includes medical spend, premiums paid for by the employees and members, as well as employers, and it is intended to provide insight to Congress and HHS regarding the cost of healthcare coverage. Its focus is not, as its name states, prescription drug data only. Which plans are subject to RxDC reporting? Any employer plan, be grandfathered or non-grandfathered, insured, self-insured, level funded, of any type, meaning large group or small group, including those plans that do not cover prescription drug benefits, known as minimum essential coverage plans that only cover preventive care. These plans would be sponsored by either private or public, profit or nonprofit employers, including church plans subject to the Internal Revenue Code. This provision also extends to tribal plans, either their governmental plans or their commercial enterprises. Which plans are exempt from RxDC reporting? Any standalone or integrated health reimbursement arrangements, known as HRAs, health savings accounts, known as HSAs, individual coverage HRAs, known as ICHRAs, as well as any type of accepted benefit programs, which include dental and vision plans, plans that cover only critical illness or hospital confinement, in addition to health FSAs, and plans that only cover retirees. If you sponsor a plan that is only available to retirees, and does not cover any active members, the plan that is a retiree-only plan would be exempt from RxDC reporting. Another group of exempted plans are those plans maintained by an employer for non-U.S. citizens or residents that reside outside of the U.S. This would be a plan covering employees in Germany, as an example, for German nationals. Those plans would also be exempt from RxDC reporting. Now let's look at a couple other provisions. Which plans are required to report, and which plans, what do the plans report on? All plans, be fully insured, level funded, or self-funded, will be required to report P2. That is general plan information, the plan year, who is the plan sponsor, and also for medical plans that will be reporting on D1, which is plan enrollment and employer and employee or member cost sharing, TPA fees and stop loss, to name a few items. D2 pertains to medical information. D3 through D8 pertains specifically to pharmacy. So if a plan does not cover pharmacy benefits, reports D3 through D8 would not be included. There is also a narrative that is a brief summary regarding the pharmacy and the medical plan cost offerings for a group health plan. Which plans are required to report? As I indicated earlier, all plans except for those noted in the accepted category would be required to comply with the RxDC reporting requirements. P2 is required is the transmittal form, so every type of report that is filed with CMS, the Centers of Medicare and Medicaid Services, will include a Form P2. That is the transmittal form that identifies the plan sponsor, plan administrator, and other details regarding the plan. Reports D1 through D8 will be required only for medical and pharmacy benefit programs. So if you offer a medical plan that covers pharmacy, you will be filing the reports D1 through D8 in addition to the narrative. If your plan only covers medical coverage and excludes pharmacy, you would be reporting P2, D1, and D2. If your plan is only covering pharmacy benefits, you would be reporting on P2, D1, and D3 through D8. D2 is excluded as that only pertains to medical plans. And a narrative is always filed for all plans that are submitted to CMS. How are the RxDC reports filed? They are filed electronically via the HIOS website, which is the website sponsored by the Centers of Medicare and Medicaid Services. Paper filings are not permissible for 2023 calendar year reports. Employers who are required to report on one or more of the medical plans, some may be fully insured and others self-funded, may have to work with different vendors to complete the requirements. Understanding that you may file directly through your third-party vendor, be your medical insurance carrier if your plans are insured, or your third-party administrator and or PBM if your plans are level-funded or self-insured. Understanding that if you fail to file those returns within the timelines that the carrier, TPA, or PBM have noted in their questionnaires, you may be required to report directly any information that has not been captured in the survey or information the carrier, TPA, or PBM are filing. You may also consider contracting with a third-party vendor to complete the reporting requirements. When are we required to report? The RxDC reports are due to the Centers of Medicare and Medicaid Services, or CMM, no later than June 1st, 2024. We are reporting only for the 2023 calendar year. Regardless of what your ERISA plan year or plan structure may be, you will always report for calendar year 2023. Note that different entities may report for different portions of the RxDC reports. However, the information should only capture claims and or premiums paid within the 2023 calendar year. Now let's review a couple other provisions. Who are the parties responsible for reporting? If you sponsor a fully insured medical plan, your insurance carrier most likely will be handling most of the reporting requirements. They'll file a Form P2, which is that transmittal form, Forms D1 through D8, and the narrative. You as an employer may be required to complete a questionnaire or survey that the carrier may have sent to you. That information is required because the carrier is required to capture the information found in the transmittal form, Form P2, and the Form D1. This would include member and employee contribution or member contribution information for 2023. If you fail to comply with the reporting requirements, as I noted earlier, the carrier may require that you file that information that is missing directly with CMS, or you may contract with a third party to file on your behalf. If the plan is level funded or self-insured, and it's an integrated self-insured medical plan, meaning that the TPA also manages the network and the PBM services, the TPA most likely will be sending a survey or questionnaire that the employer will be required to complete. That information is required to finalize the completion and submission of the D1 and the P2 files, as noted earlier. The TPA and or PBM, if it's the same vendor, they most likely will handle all of your reporting requirements. They'll most likely file P2, D1 through D8, and the narrative. However, if you sponsor a self-insured medical plan that is unintegrated, meaning you have carved out the pharmacy, it is likely that you will have to work with your TPA and PBM, as the TPA may only report on the aspects they manage, which would be the P2, the transmittal form, D1, which is the plan information, member and employer contributions, and D2, which pertains to the medical plan, as well as the narrative. The TPA may send you a questionnaire asking you to complete certain records that they will need to file the P2 and D1 reports. If you are working with a PBM, which is handling your pharmacy, you will most likely be also required to work directly with that PBM to ensure that you complete their questionnaire, as they will need to file P2, D3, and D8, and most likely the narrative on your behalf. In some cases, TPAs and or PBMs have made a decision not to file on your behalf. If that is the case, you will be responsible for filing all the reports directly with the HIOS, with CMS, or you may contract with a third party for that service. Can multiple parties file RxDC reports for my plan? What if I have more than one plan? Well, the instructions that HHS and CMS have developed indicates that more than one entity may file on behalf of the same plan. Very common for a self-funded employer that has an unintegrated self-funded plan, the TPA will be filing some reports while the PBM will be filing other reports. So it is important to understand that you may allow multiple entities to file on your behalf as long as only one D1 report is filed for the 2023 reporting year. How can I confirm if my insurance carrier, TPA, or PBM completed the RxDC filing on my behalf? Unfortunately, there are no particular records that will be made available to you online that will reflect that the RxDC reports have been filed on your behalf by either your insurance carrier, if you're fully insured medical plan, your TPA, or your PBM. For this reason, we recommend that you retain records in writing from your insurance carrier, PBM, or TPA indicating that they will be filing on your behalf. If they fail to file on your behalf, unfortunately, the reporting responsibilities will fall upon you if you're a self-insured or level-funded plan, or if you miss the deadline established by your medical insurance carrier. If you're fully insured, you will be required to file those reports on your behalf. What happens if the employer went out of business in the 2023 calendar year? If the plan is fully insured, the medical insurance carrier would still be required to comply with the reporting requirements. However, if the plan was self-funded or level-funded for 2023, it is left to the discretion of the plan to determine if they want to file the RxDC reports or not. If there is a change in a PBM or TPA during 2023, or the funding medium changes during 2023, who reports on behalf of the plan? As I've noted earlier, if there's a change in TPA or PBM, it is critical to reach out to your PBM or TPA to confirm if they will be filing on your behalf for a terminated plan. If they fail to file on your behalf, you would be responsible for filing those returns yourself. If you are fully insured and you transition from a fully insured platform to a self-funded or level-funded platform, please note that your insurance carrier would be responsible for reporting for the months that they provided insurance coverage to your employees. Any months where you were self-funded or self-insured, you would be required to work with your TPA and or PBM to ensure that they're filing the RxDC reports on your behalf. What would be critical aspects to ask? Is your TPA, PBM, or insurance carrier filing on your behalf, and which deadlines, if any, you are required to complete a questionnaire or survey and submit it to them? And what happens if you fail to complete that questionnaire or survey on a timely basis? Will you be required to file the missing information? Most vendors have indicated that if you miss the deadline established by that entity, that vendor, you will be responsible for filing the information that is missing. Where can you obtain information to file the reports? Now, let's assume that I've determined that my carrier and or TPA or PBM will not be filing on my behalf. Where do I gather this information, or where do I gather this information if I have to complete a carrier or TPA or PBM questionnaire? The majority of the information to complete the P2, which is usually a questionnaire asking your plan number, plan ID, your plan name, your plan year, would be found in your 5500s if you file Form 5500s as an ERISA subject plan. If you're not subject to ERISA, you may file that information in your provider contracts, your plan documents, or if you're fully insured, your insurance carrier documents. The D1 information is found primarily in your HRS system, as well as you can ask for assistance if you're self-insured or level-funded from your stop-loss carrier, your TPA, to assess what your premium equivalents are. If you're self-insured, if you're fully insured, you can reach out to your insurance carrier to assess what was the total premium amount paid to that carrier in 2023. The D2 information will be coming primarily from your insurance carrier if your medical plan is insured. Normally, they'll file that on your behalf. If you're self-insured or level-funded, this information will come from your TPA and a minor role from the PBM. The information to file D3 through D8, if you're self-funded or level-funded, will come directly from your PBM. And the narrative information will come from the insurance carrier, the TPA, or PBM. As noted earlier, if you're fully insured, most likely your insurance carrier will be filing pretty much everything D2, D3 through D8, and the narratives, including to the P2. Unless you miss the deadline from the carrier, then you would be responsible for filing the D1 information. You may question yourself, do I need to open or start registration in CMS to open a HIOS account? The answer is, if you filed with CMS last year under RxDC, you most likely have an active account, so there's no need to reissue an account or open and register for a new account. You can use the account you used last year. If you're not uploading any files to D1 through D8 or the narrative, you do not need to create a HIOS account. Why? Because the insurance carrier, if you're fully insured, or your TPA and PBM have made you aware of the fact that they're filing on your behalf. Now, if you've determined that you are required to file, please note that it will take up to 2 weeks to get your HIOS registration. So please do not wait until the last minute to obtain your HIOS registration. Or alternatively, you may retain the services of a third-party vendor to assist you with RxDC reporting, in which case you will not be required to file or register with CMS. As noted earlier, most of the information that you can collect to complete the filings, assuming you have been informed by your carriers that they will not be filing on your behalf, either your TPA, ASO vendor, or PBM have sent you a letter informing you that they will not be filing the RxDC reports on your behalf, you will be required to file those reports on your own, or you may engage a third party to file on your behalf. Please refer to Module 2 of our 3-part module to review how to create and register to obtain a HIOS account, and if you are required to upload and file, please also proceed to review Module 3, which is after you completed the registration process, we will walk you on the step-by-step process of uploading those reports into HIOS. Now let's briefly talk about the RxDC carrier, TPA, and or PBM questionnaires that most employers are receiving or plan sponsors are receiving. As I noted earlier, they're used by TPAs, PBMs, and insurance carriers to complete the RxDC reports on your behalf. Fully insured plans will be requesting plan information in addition to premiums paid by the employer or members for 2023. And if you're level funded or self-insured, you may receive potentially 2 questionnaires, one from your PBM and one from your TPA, asking certain information. They may ask, again, the same information as I noted earlier, D1 and B2, your plan name, plan number, plan year. And they will also ask for total premiums paid by members versus the employer. And that will be required to complete the reports P2 and D1. And if you have failed to complete the questionnaire by your TPA or PBM, there may be other records that you will have to obtain from your TPA or PBM, as most likely you will be required to report that information directly yourself with CMS, unless you contract with a third party for that service. Now let's look at the general information that your carrier, TPA, or PBM will be requesting for completing Section P2 or Report P2 of RxDC. The first section will be information that is general plan information. Where was the plan offered? What is the plan year? In most cases, if you are self-funded or level funded, your TPA will know which states the plan was offered and your plan year. So that information may not be information that your carrier and or TPA may be requesting, or your medical insurance carrier. They should know what your plan year is. However, they will be asking for your group health plan name, your group health plan number, as well as your 5500 plan number if you are subject to ERISA. The Section 2 of P2 is identifying additional information regarding the plan. If you're self-insured, and may be asking about your TPA and or PBM information as well. The last section, which you do not need to complete on P2 in the carrier questionnaires, will ask which reports you will be filing. Now, this is only completed if you are directly filing onto the HIOS website. You most likely will not see the third row noted here, noted in any carrier, TPA, or PBM questionnaire. This is only if you need to file directly with CMS. You will be required to complete this section. I would encourage you to refer to Module 3 of our RxDC reporting to review how to complete these last sections. The first part is the group plan information. The carrier or TPA or PBM will ask you to report your group health plan name. Your group health plan name is the plan's legal name as it appears in plan documents, wrap summary plan descriptions, or Forms 5500 if you're a plan that is subject to ERISA. If you're a plan that is not subject to ERISA, then you would be using the plan name that you use to identify that plan. For example, If I am a tribe, I would use Tribe ABC medical program. That would be the name that you would use if this is my governmental tribal plan. If you were, same thing, if you were a city, this would be City ABC's medical program. If you're a group health plan is subject to ERISA, you would use the plan name as it appears in your ERISA plan documentation or Form 5500s. Your group health plan number is the number that you use to file your Form 5500s if you're subject to ERISA. If you are not subject to ERISA, you can use any number that is a unique plan ID. It could be a contract number, it could be your employer EIN, or a number that you use in your accounting system. If you are subject to ERISA but you do not file 5500s because you do not cover 100 participants at the beginning of the plan year, you can use any other number. For example, your EIN, it could be the contract number, any identifying number that you use for that group health plan. Only if you are filing the the P2 report directly with CMS will you complete the carve-out description. The carve-out description is intended to identify what you're reporting on. For example, if you're reporting only for your PBM because your PBM said that we're not filing, you would state pharmacy only. If you're reporting only for your TPA because your TPA is not filing but your PBM is, you would report medical only, and so on and so forth. If you are reporting for all plans, then just leave it blank and do not report anything else. Your Form 5500 number, if you're an ERISA subject plan, as noted earlier, your plan number and your 5500 number should be the same. Your group health plan number and your 5500 would be the same if you file 5500 forms. If you do not file 5500 forms, leave the group. You can enter your group health plan number. As I noted earlier, for the 5500 number, you leave this column blank if you do not file 5500s. Now, what other provisions could potentially be included in that questionnaire? Some vendors will be asking if you have particular states where your plan is offered. Now, it is not very common in a carrier questionnaire or a TPA questionnaire as they already know this information. So most likely, if you're filing your P2 report, you will indicate in which states the plan is offered. If you're filing the P2 plan directly or report directly, you would need to identify if the plan is offered nationally or if it's only offered in certain states. Please note that when we look at the offering being a national offer, it's not which employees are covered or members are covered in each state, but rather if this employee or member resided in the state, could they enroll in that plan? Most PPOs will be entering national because PPOs are offered nationwide. It also would need to require to report if that plan is offered outside of the U.S. in one of our U.S. territories. The next section is your market segment. Again, for fully insured plans, you're not required to complete this in the carrier questionnaires. The carriers know which market segment you're a member of. This may be applying to your TPA or your PBM. And the small group market is defined as fully insured group health plans offered by plans of employers with less than 50 or fewer employees, meaning they're not an applicable large employer under the ACA. If you reside in a state that uses 100 employees, a small group, then you would report 100 employees. Again, this is really more for fully insured plans. Your carriers will know what market segment you're a member of, so it's unlikely you will have to report that. Large group market segment is defined as more than 50 employees, unless you reside in a state like California or Colorado as an example, that use 100 employees to identify a large group. If you're self-funded or level funded, self-funded small employer plan is defined as less than 50 employees, full-time and full-time equivalent, and self-funded large employer plans as defined as plans with more than 50 employees. As noted earlier, we would also be reporting on the plan year beginning date and plan year end date. So that is something your medical insurance carrier, if you're fully insured, will be asking for. Your TPA may or may not ask that question because they currently assist you with the preparation of your plan documents. Most likely, they already know when your plan year ends and starts. So please note that if you are a non-calendar year plan, you would be required to report the plan year beginning date and the plan year ending date, such as 7/1/2022 through 6/30/2023, because you're reporting for the 2023 calendar year. And then you would report from 7/1/2023 through potentially the next plan year. plan year end date of 6/30/2024. However, you would be reporting as the total number of members covered, number of belly buttons. This means actives, dependents, active employees, their dependents, retirees, COBRA qualified beneficiaries, severed employees, quote unquote belly buttons, as of 12/31/2023. For the first portion of your plan year, if you are a non-calendar year plan, you would report 0. For the second portion, which is intended to end on 12/31, you would be reporting the total number of belly buttons covered, as noted in the example above. Now, a couple of other informational records that your TPAs and PBMs will be asking is the plan sponsor, name, and EIN. This will be the name of the entity that sponsors the group health plan for which the RxDC report is being submitted. This could be a single employer, or if it's a MIWA, it's the MIWA or association, or the trust if there's a trust sponsoring the plan. You will include the issuer name and EIN for fully insured plans. It's the name of your insurance company, understanding that the questionnaires normally will already identify who the carrier is, so you don't necessarily need to include that information. This is only necessary if you complete the P2 form on your own. If you are self-funded or level funded and you have stop-loss coverage, you would be reporting the name of the stop-loss carrier, not the name of the plan sponsor. When we look at the term issuer name and EIN, it's the name of the stop-loss carrier and EIN. If stop-loss coverage is not offered, you leave this section blank. And then you proceed to report on the TPA. If you have a third-party administrator, you would enter the name of the third-party administrator, their EIN, and the same holds true with respect to your pharmacy benefits manager or PBM. Again, this is usually not in the questionnaire for the TPA or the PBM because they already know who they are and what their EIN is. So this is only required if you're filing the P2 form on your own. Now that we've looked at what the P2 form looks like and what it requires you to complete, let's review in greater detail some of the more critical information that the carrier or TPA questionnaires include, which is calculating the average monthly premiums and premium equivalents, which are required for the completion of the D1 report. Now, if you receive a questionnaire for your insured medical plan, they will ask you to provide them with the average monthly premium paid by members, as well as the average monthly premium paid by the employer. Please note that the member is defined as a belly button. As I noted earlier, active employees and their dependents, COBRA qualified beneficiaries, including their 2% administrative fee when we're looking at premiums paid by members. And if you have retirees, the retirees that are covered under their group health plan, in addition to any severed employees enrolled in a severance medical program. The first thing to note is 2023 annual premiums paid to the medical carrier. That is your starting point. You will need to add all of the medical premiums paid to the insurance carrier that is asking you to complete the questionnaire, and that will be for the 2023 calendar year, January 1st through December 31st, regardless of what your plan year is. You will include premiums paid to the medical carrier for all plans sponsored by that specific carrier, assuming that those plans are treated under the same plan number, meaning if I have a early retiree program and then I have a plan that is also commingled with my actives, that is one plan. And if you offer 3 plans like an HMO, a PPO, and an EPO, and you're fully insured, you will be reporting for all 3 plans because they're offered by the same carrier and they're treated as a single plan. So if you're in a ERISA subject plan, which plans are part of Plan 501, as an example? That is what you would be reporting for that specific carrier. You must report the plans that were offered during 2023, even if the plans were not offered during the entire 2023 calendar year. Now, how do you calculate the average monthly premiums paid by members? As I noted earlier, the definition member includes all belly buttons, and we're looking at the premiums. You're first going to identify the total annual premiums paid to the carrier, and then assess of those total premiums paid in 2023, which portion was paid for by members. Active employees and their dependents, COBRA qualified beneficiaries, including the 2% administrative fee, retirees if they are commingled with your active plan, and you also include any type of wellness incentives like a tobacco surcharge, smoker, no smoker rates, and any spousal surcharges if you require employees who have a spouse that has access to other coverage to pay a higher premium. You will include the entire cost paid for by members covered under your plan in 2023. You then take that number and you divide it by 12. And you divide it by 12 even if the plan was not in effect for the full 12 months. Where can you find this information? Well, your insurance carrier or accounting software should tell you how much you paid the carrier for 2023. And in order to assess what portion was paid for by members, you should look at your payroll or HRS system. You may need to reach out to your COBRA administrator to obtain information on COBRA premiums paid during 2023. Again, this is only for the medical plan. Which plans does the employer not report for? You will not be reporting for plans that, such as an HRA or HSA, even if they're offered alongside your medical plan that is fully insured. And again, note that you're reporting for the 2023 calendar year. And you only report for the plans that were offered by that carrier, assuming that those plans are treated as a single plan, like under the same plan number, or they're not offered separately to a different employer. So that would be critical to note. So you would aggregate all of the premiums paid to that carrier, like an HMO, PPO, and EPO. If you have, for example, a union plan and a non-union plan, and the plans are different plans with different plan numbers, you would report separately for the union than for the non-union. If the union and the non-union employees accept and use the same plan, you aggregate those premiums for both plans. Now let's look at how to calculate the average monthly premium or premium equivalents paid for by the employers. So if you're a level funded plan, you will be looking at the premiums as defined, not as your COBRA accrual rates, but rather you're going to be looking at the premiums paid, cost paid, premium equivalents paid for 2023. So how do I calculate my premium equivalent expenses? You will take all the medical and pharmacy claim costs you paid in 2023, either paid or incurred during 2023, plus your fixed costs. This would be administrative fees, PBM fees, any fees for disease management services, or any other fees that you paid for the administration of your self-insured or level funded plan that pertains to the plan cost itself, plus stop-loss premiums, plus network access fees. And if you have capitation or direct contracting agreements with vendors for services rendered to plan members for 2023, you would add those amounts. Now you will subtract any stop-loss reimbursements paid in 2023, as well as prescription drug rebates paid in 2023. So please note that that amount, your total costs, as noted earlier, claims and fixed costs, minus stop-loss reimbursements, minus RX rebates paid in 2023, is what will give you your total premium equivalent. From that amount, you will then assess what portion was paid for by the employer versus the member. So in order to assess the cost paid for by the employer, you will identify the premium equivalent, subtract the amounts paid by the members, and the resulting amount is the employer contribution, or premiums paid by the employer in 2023. You will take that amount and divide it by 12, even if your self-funded or level-funded plan was not in effect for all of 2024. In addition to that, it is important to understand where can I gather this information to conduct those calculations. Your TPA can certainly provide you with the total claims paid for in 2023 or incurred in 2023, and potentially may know some of the pharmacy expenses claims paid in 23, assuming that the TPA is integrated with your PBM, as well as stop-loss reimbursements paid. If your pharmacy is carved out, you will have to most likely work with your PBM to access that information, as well as rebates paid. Stop-loss premiums can also be obtained from your HRS system, as it is a premium that you pay every month. So your accounting or HRS system should tell you what amounts were paid to the TPA or stop-loss carrier and or PBM. And your payroll or HRS system should hopefully give you guidelines on which amounts were paid for by members for 2023 versus you, the employer. As noted earlier, you report on the plans that are self-insured or level funded. You aggregate all of the plans that you were offering in 2023 that were self-insured or level funded, and you aggregate all of those costs, assuming that they're in the same plan number, assuming that they're one single plan. If you have two separate plans, like one from a union and one from a non-union, you would report separately for each of those plans. You would not include any HRA or HSA contributions made by the plan during 2023, and hopefully that will give you great parameters on how to calculate the average monthly premiums. So now that you've actually calculated those amounts, you will include them in the carrier questionnaire, or if you're required to complete the D1 form, you would report that information as noted above. Average monthly premiums of the members, as I noted earlier. You follow the calculation in the prior slide, that is how you report it. If you are a self-funded plan, you follow the methodology I've noted earlier. And then you proceed to report the average monthly premium paid by employers, which I noted earlier. The formula is quite self-explanatory. Now, if you are required to file the D1, that is most likely all the information you will be required to complete for a carrier or a TPA or a PBM. Now, if you're required to file the D1 yourself, not only do you need to report on the items I've noted earlier, they will be asking for additional information, your company name. What is your company name? For your insured plans, you enter the name of the medical insurance company, assuming you failed to complete information from the insurance carrier, and they've noted that you need to proceed to do this on your own. And you would include also your company EIN. The aggregation state is the state where the plan is originally, contract is issued. So for example, California, for self-funded plans, it's a state where the plan has its principal place of business, usually where the plan sponsor is headquartered. You can only use one state for the aggregation state. And as I noted earlier, the market segment is required. As I noted earlier, I've discussed it in greater detail, how to complete this section depending on your fully insured or self-insured large group or small group market. Now, we've covered most of the D1 information in prior slides, which is how to calculate the average monthly premium, how to calculate the monthly premium paid by employers. Now we'll cover other items that were not noted in the prior slides, which are part of the D1 filing. The life years will include the earned premium. This one's quite simple, and I'll just note it now. You just report the total premiums paid to the carrier, medical insurance carrier, for all plans offered by the medical insurance carrier for 2023. And then lastly, we'll cover the other elements which pertain to the administration fees paid by the TPA and then stop loss premiums. So let's continue with the life years. How do you calculate life years? You will be required to look at the total number of members, meaning active, retirees, COBRA, qualified beneficiaries, dependents, severed employees, every belly button covered by your plan in 2023 for every month. So you would select the same date of the month to look at how many individuals were covered by your plan. You aggregate all of the months in 2023, and that will give you your total member months. Then you will divide that by 12, and that will give you your total life years. That is what you would report on the D1 form if you have to file it directly with CMS. It's a relatively simple process. And this example is, the first line would be for a fully insured plan. The second line would be for a self-insured plan, assuming that you sponsor two different plans. That's how you would calculate it. As noted earlier, the earned premium is only for fully insured medical plans, and that would report the total premiums paid to the carrier for 2023. The premium equivalents, we've already discussed them, how to calculate them. This is a total premium equivalence incurred in 2023, not noting the member or the employer, but rather the total cost. And then let's proceed to address the last two columns of the D1 form. The administrative fees is reported to identify the total fees paid to a third-party administrator, a TPA or an ASO vendor administering your self-funded. And the stop loss premium paid is only if you offer stop loss coverage, either for aggregate or specific. You would enter the total premiums paid to that stop loss carrier for 2023. Now that we've completed the P2 D1, what would be our next steps? Our next steps are, if you have finalized the completion of the carrier questionnaire, proceed to submit it by the deadline the carrier has noted. If you're self-funded or level funded, your TPA or PBM will receive your questionnaire and file on your behalf. Now, if you have been informed that your TPA or PBM will not be filing on your behalf, consider registering on HIOS to file on your own, or considering contracting with a third-party vendor to complete those filings on your behalf. If you choose to file directly with CMS, please proceed to our Module 2 on how to register on HIOS, and then proceed to gather all the necessary information to complete those reports, to file those reports within the HIOS website. And lastly, if you are required to report directly, we encourage you to view our last module of our RxDC training that will teach you how to submit the reports within HIOS. So hopefully today's event has informed you on how to proceed with RxDC reporting, either completing the questionnaires for your carriers, or if you are required to report directly with CMS on one or two of those provisions, P2 or D1, we've walked you through that process. Please refer to our secondary and third modules to review how to file additional returns. This now concludes today's presentation. If you have any questions, please feel free to reach out to your hub representative. Thank you.